Alrighty, what a interesting week. Absolutely amazing week here at CYPRX. I had personally a phenomenal week analyzing the markets for you guys accurately and also being an intraday market participant this week. I actually traded a lot more frequently than I usually do. I placed 3 trades this week. Had a very nice profitable week, came away with making $7,000 off of trading Bitcoin. I'm going to go over another additional trade that I took today on Bitcoin. Very easy, simple, aggressive style scalp after a break and retest of the Delta. So just showing you guys the information that you all have access to is way ahead of its time here. Paying attention to where these institutional levels are in the market and then monitoring price action to look for setups at these deltas. It's honestly one of the easiest strategies once you learn it and you know what to look for. All that's really left for you to do, as I've mentioned in previous calls, is manage your risk accordingly after. Again, just trying to show you guys why I've kept consistency in these markets. I talked yesterday briefly on why my win rate is so high. I don't really look for sell positions. I really only look how to stack confluences in my corner that give me, an edge in the market to take buy positions or buy scalps intraday. And so yet again, every single confluence that I've gone over for you guys, the confluences that I built for you all on the CYPRX Advanced and 2.0 courses all played out today, which allowed me to expose my capital to these markets in an efficient and effective and superior freaking way, and was able to siphon some liquidity from these markets. And I just want to show you guys, we have a chat group going, and this is no offense to, other individuals in this community, but this is a community right here, a private chat that I've created of over 20 people in this group that are actually profitable, that are, passing challenges or actively trading funded accounts. And I mean, you can see I wasn't the only person today making money via people in this community. Eric ended the day with $10,800. We had Justin make a withdrawal of over $700 this week. If you come up here and look a little bit, Nick was creating some profitability in this market this week. We had freaking Alex. We got Angel in this chat. We got Jordan in this chat. I mean, you got Jordan here making $1,000 there. So, institutional scalper, your mentors in this community that are in this chat making money. Ruby made some nice money this rising in this chat. So I'm just trying to show you guys that it's not just me doing this. There are other people in this community making this strategy work for them, whether it's the order flows, it's the deltas, it's the fundamentals, it's 2.0. This community, for a fact, has the information for you to make these markets work for you, right? To siphon money from them, to create the money out of thin air, just like the banks are doing, whether that's through trading, DeFi, long-term investing through dollar cost averaging. This is such a powerful community, and I hope that you guys are really truly paying attention to this. So as always, what allowed me to gain the confidence to take Bitcoin buys today, I always try to start out with a fundamental analysis for you guys. That's really the type of trader that I've become because I enlighten you guys every single pretty much session on changing fundamentals. Over the past 3 years, I really started to incorporate fundamentals into my trading regime, and it's helped me gain a lot more confidence on top of the directional bias that I have for that day, layered on top of price action. And so when you can see supportive fundamentals that usually tend to reflect themselves in a risk on market mood, and then on top of that, you can see bullish order flow, whether it be on the higher time frame, fractally, and at and around these deltas, it becomes relatively simple to see where the market is headed most likely. Again, none of us know the future and none of us know what the markets are going to do. But when you can put these variables, these confluences into your corner, it again gives you a market edge in which you can capitalize on by choosing the amount of money you want to expose to these markets, and you can profit from that exposure. So I'm just a normal guy here in an attempt to show you guys that it's quite relatively easy. But you do have to put in the elbow grease. It does take time to master, and everybody's journey is different. Some people it's 3 months, some people it's 3 years. But the answer that a lot of people are looking for, it's here in this community. You just have to figure out how to implement the information that we're providing to your own personal, approach. Okay. So starting here, that's my rant for today. Fundamentals. Let's go over why I was seeing a risk on market mood, what I was looking at this rising. I literally had like 15 tabs open to digest all this information. And so instead of just adding all those tabs to the Discord, what I do is I thoroughly read through them and then draft my own bias into these reports for you guys. And so this is what I came up on this rising, everything that I was seeing in the market, and why I was able to gain confidence in the fundamental side of things to take this buy position today on Bitcoin. So we'll cover that first, then we'll get into the technical analysis. All right. So just to kind of full circle, just keep in mind that in previous reports and previous trading sessions, we had seen a risk off market sentiment. We had talked about things that we needed to see in order to see the market sentiment improve, right? There was a big fear of a recession, of inflationary risks to the upside. And some of the data and some of the earnings reports that we got today, along with some comments from Fed speakers, kind of dialed that uncertainty back slightly. The market uncertainty still exists. And so I'm not saying that it's completely faded, which you will see in this report. But intraday, keep in mind, as scalpers, as intraday traders in this market, we have to be adaptable and reactive. I've said this to you guys on previous calls, and we've seen that this week. Perfect example. The market can be down 50 billion to $100 billion dollars, and it is your job not to marry a bias to understand why the market is down that amount of money and understand what could shift that and react to it if that shift happens. Then today and yesterday, we saw that shift kind of dwindle out where the market turned around from being bearish and flipped back intraday bullish, right? And so anybody today that married the bearish bias and was taking sells, they got liquidated because they weren't able to adjust, which is why I stress the importance of learning how to gauge these if-then scenarios. You'll have a lot of uneducated retail investors on the internet say that if you do if then scenarios, of course you're always going to be right because you're always doing the what then, if then scenario. Like that's inaccurate. Market participants, institutional hedge funds, and investors, they're reactive as well. They don't marry biases. If a new breaking headline comes out that Russia's going to freaking attack the United States, do you think that institutions aren't going to adjust their algorithms to adapt to those market conditions? No, they are. And so that's exactly why we as retail participants on the opposite side of these market makers need to be able to adjust as well. So reading this, even with fresh tariff headlines and gold carving out a third consecutive record high, crypto managed to head into the weekend on a strong footing. During Friday's session, the total crypto market cap had clawed back more than $100 billion of previous intraday losses that we experienced this week. The resilience looked counterintuitive at first glance. So when I first came into the market this rising, I was honestly a little bit skeptical and I was thinking that we were going to see a massive sell-off because I had read an article saying that China had just upped its duties on the U.S. imports to 125%, right? The tariff increases, which from my perspective was that it was going to deepen fears of a drawn-out trade war. But taking a closer look at this week's macro mixed signals revealed to me that people were buying this dip, that stocks were actually appetizing this week to investors that were able and willing to take the risk, right? And we can see that reflected in the price action today. So why did that happen intraday? First, disinflation takes center stage. The real tailwind arrived from the inflation dashboard. Keep in mind, I broke down for you guys this vocabulary in previous reports. A tailwind is something in terms of vocabulary that tends to support risk assets fundamentally. A headwind is the opposite. If you see terminology stating that this was a market headwind, then it usually tends to have a negative implication on risk assets. So the real tailwind this week arrived in March's CPI and more strikingly in Friday's PPI releases, both undershot forecasts across the board. Headline producer prices fell 0.4% month over month on the first decline since October 2023, while core PPI barely inched up 0.1%. On a year-over-year basis, producer inflation also slowed to 2.7%, a 6-month low. The granular detailed mattered just as much. An 11% plunge in gasoline, broad softness in food inputs, and the steepest drop in services costs since mid-2024. Taken together with cooler CPI earlier in the week, traders were reminded that the disinflationary trend is still intact, keeping alive the argument that the Fed will eventually regain room to ease monetary policy, even if trade frictions linger. And so that was one of the key fundamentals underlying to my bias today, that the market, if we didn't see any major sell pressure from large institutions at or around deltas, was most likely going to see buy positions prevail, right? As the market starts to price in a higher probability that the Fed's going to cut rates, we know historically speaking that tends to benefit risk assets. increased probability of expansionary liquidity conditions. Obviously, of course, lower inflation beating the market analysts because the market's forecasting higher inflation, yet the inflationary reports for the past two reports have shown signs of disinflation. So, what's the market intraday going to gravitate towards? It's going to gravitate towards to the actual data, right? So, moving on, we also had the bank's earnings signal underlying momentum. And yesterday's fundamental analysis update, I mentioned to you guys that today we needed to be paying attention to the bank report earnings release. Okay. And so today we got that release. What does that mean for the markets today? Corporate fundamentals added another layer of support. The big bank earnings curtains rose with Morgan Stanley, Wells Fargo, and JP Morgan. Trading desks stole the spotlight. Morgan Stanley's equities revenue rocketed 45%, helping push overall profit up 26% to a record $4.32 billion. JP Morgan's top line beat echoed the theme. Robust trading income implied that the market depth and liquidity still remains healthy despite headline noise. This is an important, I'll actually put this in bold right here because again, as I mentioned today when I was doing my fundamental analysis, I could kind of see that the fear, uncertainty, and doubt on headline figures still linger, but the actual underlying data is pointing towards economic resilience and disinflationary pressures. A positive sign for risk assets, crypto included. This is because it suggests that capital markets activity, IPOs and M&A and secondary offerings can keep humming once the tariff fog clears. Okay. So upbeat earnings, obviously, of course, signals that from a bank's perspective, they're not suffering and it's not as bad as people are actually anticipating. Okay. Especially you're seeing top of the line growth. You're seeing percentage increases across the board in all these earnings from Q1. That speaks loudly because it shows that as of right now, we're not seeing any massive or substantial economic turmoil. Now, again, that's yet to come because we haven't seen the effects of tariffs. Obviously, of course, they've just been implemented, which is what market analysts are expecting. We're expecting that in the future, these tariffs are going to have downbeat performance on the overall economy. But right now, that's not to be the case. Okay. So to me, as I was reading this rising, I saw this from a perspective that this might start to possibly ease previous outdrawn recessionary fears. Okay. So that was the number two foundation today from my fundamental perspective as to why I was placing bullish bets. Last but not least, we had Fed speakers, which I also told you guys in previous reports you needed to be paying attention to. So today, we had Minneapolis Fed President Neil Kashkari. He reinforced the glass half full narrative. In a CNBC interview, he flagged a lot of good news under the hood in CPI. That comment is important because he mentioned that disinflationary pressures are still ongoing in headline figures. And he also stressed that long-run inflation expectations are not drifting higher. While acknowledging pockets of stress, he judged financial markets far from pandemic-style dislocations. Boston Fed President Susan Collins also struck a similar balance, warning that tariffs could have a near-term growth effect, yet ultimately would add back to the GDP as supply chains realign. That is a massive statement. The Fed can stay data dependent without rushing to tightening monetary policy for now. And so for traders scarred by the previous week's tariff headlines, the absence today of hawkish urgency and uncertainty from Fed speakers kind of sparked a little bit of a relief rally, right? And so again, as I mentioned in previous reports, any comments that eased recessionary fears or showed that the economy is actually performing relatively well and that the Fed continues to expect inflation to come down over time, that's going to bring back positivity and momentum to risk assets because previous to that, things that have been weighing on risk assets is the fear of higher inflation and deteriorating economic data leading to a recession. Okay. And so in the Fed's commentary today, we saw a slight shift in that sentiment. So overall, the bullish sentiment did, however, have a blemish that I found today. We got the preliminary University of Michigan sentiment, and it collapsed to 50.8, which was its lowest reading since mid-2022. While year-on-year inflation expectations still did spike to 6.7%, Consumers are clearly uneasy about the trade war whiplash, and history shows that sour sentiment can translate into slower spending with the lag. So later on down the road, I'm not saying that we're out of the woods yet. We still need to be data dependent in case the data does start to show us signs of an economic deterioration and a possible recession, or maybe we're already even in one, who knows. In other words, the market's Friday pop is best viewed as a tactical move rather than a green light for complacency. So this does not mean we get comfortable. This does not mean that the bottom is in. Moving on into next week, we still have data that we need to be mindful of, and we could still see extremely volatile times ahead and pressure on risk assets if the sentiment from today continues to deteriorate. So what to watch next week? We'll skip this because this is a recording. We won't go into this into too much detail, but next week we're going to be hosting Zoom calls for you guys. Empire State manufacturing figures, retail sales, we have unemployment claims, and we have Fed Chair Jerome Powell speaking on Wednesday. All right. So make sure that you guys thoroughly read through this so you know what to be paying attention to. Beyond the calendar, we still need to stay alert to weekend tariff rhetoric and any geopolitical surprises. Another round of tit for tat duties, or conversely, hints of negotiations or de escalations, can obviously, of course, swing risk asset sentiment. So just be mindful of any breaking headlines. I will be attentive in the Discord this weekend. I won't be too attached to it. I do need to take some time to give to my girls this weekend. But anything that breaks and changes market sentiment, I'll make sure to update you guys during Asia and New York session, both Saturday and Sunday, if need be. Lower than expected inflation, to sum this up, upbeat trading revenue at major banks, and a measured Fed tone today combined to overpower dire trade war headlines, at least for today. That's what I was seeing. Even though we saw an announcement from China surrounding tariff implications and that sparks some market uncertainty, the underlying data today pointed more so towards a risk on market mood. So that is how I utilize fundamentals in my corner today to gather confidence to say, okay, I have $200,000 worth of trading capital today that I want to expose to the market, and I want to be confident to risk 1% of my overall capital, right? I want to be confident to risk 0.5% or 0.25% of whatever it is that I'm willing to risk when I come to the markets. This was how I did it with fundamentals, right? So with fundamentals in my corner, now heading over to the technical aspect of things. And again, all these fundamentals you guys have in advance, what to pay attention to, if then scenarios, what could drive optimism back to risk assets. If you're studying this stuff, I can see the confusion if you're confused by this stuff. And if you're not, and you're kind of more, I've been in this community for a year, 2 years, you most likely can see why I was more confident today to take buy positions based on the underlying fundamentals, right? As for the technical aspect of things, just to show you guys, as always, that you all had these levels in advance, let's just go take a look at that. Bitcoin deltas here. This was a post from Scalper, always in advance. This is from the 10th on Thursday. Today is the 11th. So just showing you guys that you had these levels in advance before they came into fruition. Bitcoin was trading at around $79,500 per Bitcoin at the time of Scalper's post. And you can see right here the 82666.7 institutional sell delta. So that is going to be our key primary focus today. And then the delta slightly above that at the 84228 institutional sell delta. All right. So again, just trying to show you guys that you had access to this info, slapping those deltas onto the charts and utilizing the CYPRX 2.0 methodology, which is paying attention to what previous banks and institutions were doing. So you can gauge a directional bias, not only with fundamentals, but also with technicals by doing what the banks are doing. If previous bank and institutions are buying on top of bullish fundamentals supporting a risk on environment, what do you think you should be doing? You should be looking for price to pull back into discounts, to take buy positions to set up good solid risk to reward ratios, or you should be looking for breakout and retest buys to take more aggressive positions to jump in on continuation moves to the upside, right? I've told you guys this before. In terms of price action, if you're seeing that the market is making higher highs and higher lows and liquidating sellers and not targeting over-leveraged buyers, then it's best to trade in tandem with that momentum and not think that the market's just going to reverse because you want sell positions. If banks in previous sessions were buying and the fundamentals underlying for that day are supportive of risk assets, don't trade against that trend. You don't want to swim against the tide. You want to swim with the current in the direction of the order flow. So let me show you guys how I did that. I've already showed you guys how I had fundamentals in my corner this rising. So utilizing the CYPRX 2.0 methodology. Just looking back at the previous day, I usually tend to tell you guys I go back a day or two, sometimes even 3 days in advance to look at what institutions were doing. However, because we were operating in no man's land, meaning that we were kind of hovering in between a buy and a sell delta, I only went back a day. So looking back at this Asia session, we're on the 5 minute time frame. So I apologize if price action is kind of fractal, but you can clear as day see what institutions were doing during Asia session. At the beginning of their session, they trapped sellers above highs. Prior to their session during New York, we had institutional buys start to flood in. Institutions during Asia discounted price into where banks were buying during New York. And then institutions during Asia started buying, pushing price higher before they passed price action over to London. So this is one session's worth of bullish price action that, again, logically speaking, if price action is not targeting these over-leveraged buyers and is instead targeting these sellers in previous areas, we want to be trading in tandem with that. So using the 2.0 methodology, I simply just analyzed that this was an area of interest where banks were buying from with enough momentum to break previous bearish market structure. As you can see here, we have sellers, buyers defended their positions, and overpowered sellers. And so this is an institutional area. We know institutions are the only people with the amount of money to push price up like this, right? So that means, logically speaking, institutions were willing to buy from this area. In the CYPRX 2.0 content, I tell you guys that if you want to be a buyer, you want to be buying from these institutional areas. It's just common sense. So that was one area this morning that I had on my charts where I said to myself, as long as price is above this area, I want to be a buyer. The only thing that would deteriorate my current market perspective is if we broke to the downside and sellers overpowered where previous buyers were buying from, showing us that sellers are now in control. And until that happened, I was going to trade with the trend. So that was Asia session. Moving over into London. London did a similar thing, albeit they did not discount price in the fashion that Asia session did. You can clearly see London session, wherever they're gathering their information from and whatever their algorithms are adjusting to, did the same exact thing, albeit on a more fractal scale. At the beginning of their session, they trapped sellers, right? Prior to that, you can see institutional buyers coming in during the beginning of London. As soon as London opened, they discounted price. Defenders or buyers defended their position and they continued with the trend to the upside, right? So this is yet another session where bullish order flow hinted at buyers still being in control, all right? So coming into this New York session, I had all this data to process. I'd done my fundamental analysis, I'd done my technical analysis, and I'm like, okay, buyers are still in control. Sellers are not showing their hand enough to break previous bullish momentum, and buyers are still taking out sell positions, right? So during New York session, all I'm thinking is as long as buyers are still in control, now looking at London session, taking a highlighted area of interest from the lows and extending that over, I want to be a buyer as long as price action is above these two Asia and London sessions. Okay. So check this out, how easy this was. As I mentioned, today was a more aggressive position. I was entering all here in this area, and the primary reason for that, and not an entry here where I usually would have, is because we were hovering around a sell delta. So as you guys can see in the chat, I always like to show you all proof. I was talking about this live during the market. You can see the timestamps, 11:17 a.m. this morning. I said, buyers and sellers are battling it out at the dark pool. Who will win? And Scalper said, I have a feeling that buyers may pull this off. We don't want to see lower lows print, right? Again, you have two very informative and educational mentors in this community that know exactly what they're talking about. So what is he talking about? We did not want to see new lows, i.e. sellers showing their hand at these institutional deltas, that they are overpowering sellers. And so keep in mind, I just physically showed you guys the two areas of interest. I would have wanted to see sellers break and push below buyers or overpower buyers before gaining confidence that they're in control. And right here is where I gained enough confidence to take a trade here in this area to look for higher prices, is when sellers started to show their hand, right? They tried to push price action down, and you can see exactly where London session traders were buying from is exactly where New York session traders today at a discount came in and started to facilitate buy orders. Again, based off of logic, If the market's going to go lower, it's going to print lower lows and lower highs, just like Scalper said in the chat. We don't want to see lower lows. Well, right here was my signal that institutions are back in control and buyers are overpowering sellers. We created a higher low, higher high formation after tapping into a discount from where banks bought from during London. So all that was left for me to do was to wait patiently to see if we could break above the delta and retest it. And if we could see that, my ideology and way of thinking was, okay, if we're not going to trade into lower buy deltas, then buyers are still in control and we're going to trade higher into sell deltas, right? And so sure enough, all I simply did once we broke above the sell delta here, I put a buy limit at the sell delta with a nice tight stop loss beneath this low, and I was simply just targeting the next sell delta above. And you can see, sure enough, we pulled back, we retested, and we shot straight into the next sell delta. This was probably, again, one of the easiest buy scalps with all the technical confluences in my corner, coupled with fundamentals. It was, again, a super easy trading day. I told you guys before, this stuff gets kind of boring once you've mastered it. It's not hard. All that's left for you to do is manage your risk. And if you can manage your risk properly, right? So for example, when price came up into this high, it did not hit my take profit. When I say manage my risk and manage my mentality, I closed my position not being greedy, right? I know it's the weekend. I know we're about to head over into Saturday, Sunday when volatility can either pick up extensively or we could see a dead weekend with no volume and volatility. And so why marry it? Even though price action didn't tap into my full take profit, it came very close. And so I took that money. I'm out of the trade, $2,300 in a matter of, I don't know, 15, 20 minutes, an hour max, and one and done, right? So super simplistic breakdown. This trade, if you guys haven't gone through the 2.0 material, played out exactly how I lay down the foundation for you guys on what I look for extensively and in detail in that content. You cannot make this stuff up. I mean, you guys have the fundamentals in advance. You have the technical areas in advance to be paying attention to. Set yourself alerts and alarms. And I mean, look at this. Think of this from a perspective on how crazy it is that you guys have access to this. So just let's think about this and talk about this logically for a second. Okay. So you guys got access to these levels, right? Give me a second, let's delete all these drawings. You guys got access to these levels when Bitcoin was trading down here, right? Imagine how much, this is why I call it no man's land, how much confusion retail traders that don't have access to these things would have had to go through from here until here when price action came into the deltas. Yes, this is a market move, right? But there's no real institutional clarity or layering to show you where price action is going to go. When price action comes into the deltas, all you have to do is then go in and look for patterns. And anything outside of that is relatively market noise and stuff that you just don't need to be paying attention to. So how easy it is to build a strategy, whether you're a DeFi investor, whether you are a long-term DCAer, or whether you're a leverage trader, by utilizing these deltas, it gives you such more clarity in the market and allows you to block out the noise because you already have a future projection of where trapped institutional liquidity and volume exists in the markets. And nobody else on the face of the internet right now has access to that except you all. And so time and time again, I'm going to consistently prove to you guys that this is all applicable and very possible for you to obtain and implement and make money from it. I mean, at the end of the day, right? That's what we're all here to do. So it's up to you to decipher this information and then be able to apply it, successfully over time. So that's my breakdown for today for you guys. Very simplistic, hopefully, if not the technical aspect of it, because I know that gets confusing if you don't know what I'm talking about. You at least took away the fundamental side of it. That is why, at least from my perspective, I'm seeing an elevated risk appetite today. You can go look at stocks. Some stocks perform better than most days today. Most cryptos across the board are elevated and up in terms of price action in the recent dip that we saw. So that means anybody that was paying attention to our DCA positions this past week, you guys are most likely in profit. So it's not just about being a leveraged trader, but it's also about knowing when to implement capital into these markets, right? We were dollar cost averaging in when the market was down 50 to $100 billion. Now that value is back in the market. We're not dollar cost averaging, and now at least I'm not. I'm going to wait on my hands and see what type of discounts and what market environment we can get next week. So Great approach to the markets this week. We absolutely freaking killed it. If you were active in the chat this week, man, freaking thank you guys so much. Seriously, I do appreciate all the rhetoric and the comments and the shares and the likes and the freaking reposts and the funny stuff that goes on in the chat. Um, it's just great seeing that I was able to build a community of like-minded individuals that are really starting to pick up and catch on what's happening.